Hi, I'm Scott Hancock.
And I'm Dina Lynn, and we're staff to the Joint Legislative Audit and Review Committee. We reviewed the inferred objective and results of a microbrewery beer tax preference. The preference results in a net exemption of $3.30 per barrel for the first 60,000 barrels of beer produced by breweries making fewer than 2 million barrels a year. The net tax savings is equal to 1 cent per 12-ounce can. The preference doesn't have a stated public policy objective. Based on testimony from when the preference was enacted in 1993, we infer the objective was to provide tax relief to the developing microbrewery industry in Washington. Washington's beer industry has changed in the years since the preference was enacted. The state now has many breweries, but produces less beer. Large breweries left the state in the early 2000s, and beer production dropped from 7.6 million barrels in 2001 to less than 300,000 barrels in 2005. As of July 2019, there were 472 licensed breweries in the state, most producing fewer than 500 barrels a year. In 2019, 27 breweries produced 71% of the state's beer, while the remaining 445 produced 29%.
Breweries directly benefit from the preference when they sell to customers, such as in a brew pub, or when they self-distribute to retailers. Distributors directly benefit when they buy beer from qualifying in-state or out-of-state breweries. In 2019, the preference provided $3.2 million in savings to beneficiaries. 16% of the savings were directly realized by Washington breweries self-distributing or selling to customers, while 84% of the savings were realized by distributors. Of the 84% of savings realized by distributors, 30% were due to purchases from Washington breweries, and the remaining 54% was due to purchases of beer from out-of-state breweries. The total savings realized by distributors was 0.17% of distributors' total business income. JLARC staff used an economic modeling tool to estimate the impact of the preference on jobs in the state. We estimate that the preference supported between 2 to 6 jobs in the beverage manufacturing industry, depending on whether breweries or consumers bear the economic burden of the beer tax. We also estimate that the preference resulted in a loss of 25 to 27 public sector jobs due to reduced state and local government spending. The legislative auditor recommends that the legislature review and clarify the preference to include a performance statement, clarify the intended beneficiaries, and ensure that the preference directly targets those businesses. Check out our website for more on this and other tax preference reviews.